Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9, brought to you in association with Bank of New Zealand. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news. The government may have to do yet another bailout of an insurer. The Local Authority Protection Program, which is an operation owned by 59 councils, runs an insurance operation called Civic Assurance. It has run out of money. $40 million in assets and $140 million worth of reinsurance have been used up because of the two earthquakes in Christchurch. And now Civic Assurance is asking the government for the central government, the taxpayer, to assume all of the risk of this program until at least June 30, and then 90% of the risk after that. Meanwhile, inflation figures in New Zealand due out today for the first quarter are likely to show inflation of 1% in the quarter, and inflation from a year ago of 4.6%. This is because of the GST increase in October, rising petrol prices and rising food prices. Yet, the official cash rate is 2.5%. Meanwhile, the government has also announced a crackdown on interest-free student loans, particularly to those people who've gone offshore. Currently, around 85,000 students or ex-students are living offshore on their OE, and 35,000 are behind on their student loan payments. They owe about $2 billion, about 55% of the money that's overdue and owed. The government plans to crack down on getting that money back and cutting the 3-year repayment holiday that's currently in place. Meanwhile, China has again tightened monetary policy, or at least one part of it, increasing the reserve asset ratio. This came after stronger than expected inflation figures for March, up 5.4% from a year ago, and stronger than expected GDP growth, 9.7%, much stronger than the 9.5% economists were expecting. I'm Bernard Hickey. That was 90 at 9, brought to you in association with Bank of New Zealand.